Welcome to the Think Big channel. Have you ever wondered why the market sometimes seems to read your mind? You enter a trade, and the price reverses. You get stopped out, and the price moves in your favor. Good news hits, and the price tanks. A perfect chart pattern forms, only for the market to crush your expectations. It's not because you're unskilled or lack knowledge, it's because you're trading in a system designed to manipulate your beliefs. I know this because I've been there. I used to trust technical patterns, news, communities, and seemingly well-founded advice. I thought if I studied enough, analyzed deeply enough, the market would reward me fairly. But I learned there's no fairness in a game where you don't realize you're the pawn. I've taken big losses right after positive news. I've entered textbook setups only to watch the price stop me out like it was mocking me. I've asked myself why I did everything right but still got it wrong. Then I realized a simple truth: the market isn't built to reflect reality. It's built to exploit belief. If you don't see this, you're not a player, you're a pawn, positioned to let others accumulate, take profits, or exit their trades. This video isn't about teaching you another analysis tool or selling you a new belief. I want to pull back the curtain most traders never see. You're not losing because you lack knowledge, you're losing because you're believing what others want you to believe. In the next few minutes, I'll show you how the market manipulates belief, who benefits from your blind trust, and how to trade with the clarity of someone awake in an emotional machine. If you still think the market reflects supply and demand, that's fine. But if you've ever been dragged into losing trades without knowing why, it's time to face the truth: you're being guided. I vividly remember stumbling across a YouTube channel about price action. The presenter sounded professional, with articulate explanations and pristine charts. Every candlestick had a reason, every price move a name. I was hooked, not by their winning trades but by how they made me feel like I'd finally found the key. I started drawing zones, marking liquidity, and studying candlestick patterns like a beginner learning the alphabet. I replayed setups and felt elated when the price moved as shown. I believed the market had logic, that mastering price action would make me a chart assassin. But when I stepped into the real market, nothing was like the videos. Support zones broke without follow-through. Picture-perfect price action reversed like a cruel joke. In those moments, I didn't just lose money, I lost faith because I thought I understood. In reality, I'd only seen a tiny piece of the game. My mistake wasn't price action itself. It was thinking I understood the market when I was just parroting someone else's beliefs. I wasn't trading with my own reasoning, I was trading a pre-packaged belief system that felt safe. But the scariest thing? When you think you've cracked the code, the market breaks it right in front of you. I learned this the hard way: the market doesn't care how many patterns you know. It only cares if you're thinking differently from the crowd. From a theory enthusiast, I became someone who spent hours watching how the market tricked others. I stopped chasing the holy grail and started hunting for flaws in crowd psychology, where the market reveals its true nature. That's when I understood: beliefs you don't forge yourself will eventually be weaponized against you. I once thought the market reflected truth: prices rose on real demand, fell on bad news. If I was quick, alert, and informed, I could outpace others. But the deeper I went, the more I saw the irony: the market doesn't mirror reality, it mirrors expectations, and expectations are easily manipulated. Have you ever seen a stock plummet after stellar news or a currency rally despite terrible GDP data? It happens weekly, monthly, and it's not random. It's proof the market doesn't run on truth, it runs on emotion. Prices rise not because a company is strong but because the crowd believes someone will buy higher. Prices fall not because of bad forecasts but because someone big is sowing fear to buy cheaper. What we see, news, charts, patterns, is just the surface of a psychological ocean. The real driver of markets is belief, constantly created and shattered. If you don't grasp this, you'll enter trades feeling right but perfectly timed to be the market's prey. You'll believe breakouts are buying opportunities, good news is a signal to go long, clear patterns mean transparency. In reality, Breakouts are where big players offload, good news is where whales take profits, and clear patterns are where you stop questioning, making you most vulnerable. I've stood before my screen with everything lining up, demand zones, engulfing candles, supportive news. I entered with unshakable confidence, only to be crushed instantly. Not because my setup was wrong, but because I was a pawn at the wrong moment. The market needed someone to believe so it could reverse. Does this sound familiar? The market isn't wrong, it just makes you feel right before you're wrong. That's how it manipulates, not with words but with the confidence inside you. The market doesn't need to outsmart you. It just needs you to believe the wrong thing long enough to bet on it. And what traps you most? Knowledge. Sounds counterintuitive, right? But why do some of the most educated traders still lose? Why do those who know every pattern get stopped out the most? Why does understanding the market sometimes make you feel more powerless? Because the market doesn't kill you with ignorance, it kills you with the confidence born of half-baked knowledge. Let me share the 3 most powerful and common belief manipulation machines. They're not invented by anyone, they stem from human psychology and are ruthlessly exploited by the market. Technical patterns, the language that makes you think the market is logical. You draw head and shoulders, triangles, count Elliott waves, and believe a breakout will continue. You tell yourself you're trading systematically, but patterns are just a way for the crowd to look in the same direction. When everyone looks, there's no one left to drive the price further. Breakouts become reversals, support zones turn into liquidity traps, and the clearest signals wipe out the most confident traders. Patterns aren't useless, but when you treat them as gospel, you stop questioning, and that's when you lose your edge. News, an emotional weapon designed to trigger instincts. You see a lower than expected CPI report, the market spikes, and you jump in. An hour later, it collapses. You're angry, thinking you were trapped. You weren't, you walked into the trap yourself, assuming news equals truth. The truth isn't in the numbers, it's in who knew them first and is waiting for your reaction. News is the crowd's cue to act, while the whales moved days earlier. Communities and KOLs, places that make you feel you're not alone. You see others share your idea, draw the same charts, post comments like, textbook setup, or, perfect bottom. You feel part of the righteous majority and trade because you believe the crowd can't all be wrong. But the market doesn't care how many agree with you, it cares how many are needed to provide liquidity for its exit. The crowd doesn't make you win, it just makes losing feel less lonely. That's how belief is manipulated, not with force or threats, but with just enough logic to make you think you're right. The market doesn't reward the correct, it rewards those who doubt at the right time and act outside consensus. I'll never forget a Wednesday evening when the market was bracing for an FOMC announcement. Social media was buzzing with predictions, every channel dissecting the outcome. Some said the USD would surge on a hawkish Fed, others predicted gold would crash. Most had already positioned themselves. I had a trade on, a short on gold after a strong rejection at resistance, a pin bar, solid volume, a textbook setup. I was sure this was it. The news hit, and gold dropped as expected. My account glowed green for seconds. I planned to trail my stop to break even, but before I could, the price snapped back, not gently, but like a slap to everyone who thought they were right. My perfect trade, along with every other textbook short, was wiped out. Those who read the news right lost, too. I was furious, thinking I was unlucky. But then I sat back, emotionless, with one question: if we all lost, who won? I reviewed the charts, the price behavior, and realized the initial drop wasn't the truth, it was bait, a perfect trap to collect sell orders before pushing price above liquidity zones where no one dared enter. I sat for hours, not trading, just revisiting every loss I didn't understand. Each time, I lost not because I was wrong but because I was right too early and too aligned with the crowd. From that day, I stopped looking for entries. I started watching who was being fooled, what they believed, and who was blindly confident. I learned to wait, for the crowd to pile in, for belief to peak. When everyone thought they were right, I went the other way, not to fight the market, but to align with those truly controlling it. The strangest part. Since I stopped predicting and started observing crowd belief, I didn't just trade better, I slept better. I no longer traded like prey. I started hunting. I once thought I controlled everything: systems, analysis, trade plans, risk management. But years in the market taught me a harsh truth: you're not really trading until you know who's controlling your beliefs. I had days with flawless entries that still ended in losses, not because the market was tough, but because I was guided, not by price, but by vague beliefs I thought were mine. Here are the 3 clearest signs I've experienced, and if you recognize them in yourself, pause, because you might not be trading like an investor but reacting like a pawn in someone else's game. You act when you feel safe because others agree. I used to love entering trades when communities aligned. The more people echoed my analysis, the safer I felt. But the market taught me a costly lesson: safety is the feeling that precedes loss. When the crowd looks one way, the price often reverses, not because the setup was wrong, but because the market needs enough participants for a reversal. A good trader doesn't seek consensus, they look for signs the crowd believes too much. You hesitate without external validation. I recall spotting a clear opportunity, a price rejected multiple times, solid structure, supportive price action. But I didn't trade because no one in my group saw it, no one analyzed it the same. I feared being different and stood aside. 3 hours later, the market moved as I predicted. I didn't regret the money, I regretted my dependence on others' confirmation. The best trades feel lonely because you're not part of the crowd. You only feel right after the market moves. This is common, even for seasoned traders. I've seen prices break highs and thought they were unstoppable. I've chased trends because they seemed trustworthy. I entered because the market proved itself, but that's not how it works. When you feel safest, the market is furthest from safe. Winners act before the market looks clear. Trading is the art of doubt, not the pursuit of certainty. A successful trader doesn't need to be right often, they just need to avoid being swept by the market's emotional tides. If you see yourself in these signs, don't beat yourself up, I've been there. I broke free when I stopped expecting the market to be transparent. I started winning when I doubted my own confidence and only acted when probabilities tilted in my favor. After years of trading, I've left a lot behind. I chased every system: RSI, MACD, Bollinger Bands, order blocks, smart money. I believed in countless strategies, formulas, patterns. Every loss sent me searching for something new, every win made me think I'd found the secret. Then one day, I looked back and realized the only thing that kept me alive wasn't a system, it was my ability to question what I believed. You can read every book, take every expensive course, but if you're swayed by crowd emotion, you're still a victim in a game you didn't design. The market doesn't need to destroy you outright, it just needs you to believe too quickly and act too slowly. Here's the key: the market doesn't need to be right. It just needs you to think you're right until you open your wallet and pay for that belief. To avoid being a victim, learn to pause before emotions take over. Observe before reacting, and most importantly, think before seeking. I survived not because I'm smarter, but because I was hurt enough to wake up, lost enough to stop believing in easy answers, and spent enough time in the market to see that price doesn't move on logic, it moves on misplaced expectations and exploited fear. Since I stopped chasing holy grails and believing in next time, I began seeing the market through the eyes of someone in control. You don't need to be right often, just know when you're wrong and take responsibility for your trades. If you've listened this far, I'm not selling anything, no courses, no magic tools. Just a reminder, you don't need anyone's permission to excel. You just need the courage to doubt and to view the market like a strategist, not a smart gambler. If this video woke you up or hit what you've been searching for, drop a comment. I want to know how many are choosing clarity in this noisy world. If you're ready to start your journey, consider where I hone my critical thinking through every trade, not to win fast, but to start slowly and correctly. Subscribe if you don't want to miss videos analyzing the market as a game of minds, not just prices. And finally, untested belief is where every trader's losses begin. But well-timed doubt is where the awake begin to rise. See you in the next video. If you're brave enough to question everything, the market will start revealing its answers.